Thanks for having us today. I think it's really fantastic that we get the opportunity to present the Grit Group, an Africa real estate business. And before I get into the detail of the slides, I would like to first show you a video. So let's go over to the video.
It started with a dream to diversify our income, where four of us boldly stuck to what we knew and our passion, Africa. We started from scratch, buying Anadarko in Mozambique, followed by Anfa Place Mall in Morocco. We ran hard to build a scalable portfolio. Our strategy was bold, focused on strong property fundamentals, always guided by our risk gatekeepers. Our focus and drive paid off, and by 2016, we were 30 people with 7 retail and office assets in 3 countries. But there is no passion in playing small. We had to step up to the international stage. Grit was born. We listed on the London Stock Exchange, the first Mauritian company to do so, and raised $132 million for expansion. Increasingly, we had to find the way in solving asset and property management challenges, building expertise and networks to manage our expanded portfolio. Our property services business, GMS, was born. Although we focused on property investment, we recognized the groundswell of demand for bespoke property developments. In 2018, co-founders Greg Pearson and Bronwyn established Gateway Real Estate Africa, rapidly becoming Africa's fastest growing property developer. In 2019, the world changed. The pandemic required a business unusual approach. Our warrior culture meant that everyone collaborated and sought solutions. We formed our family of partnerships. We realized the impact that we have on the communities in which we operate. Most of our portfolio performed defensively, but we had to ask ourselves, what does the next level for Grit look like? We're now a band of 123 specialized warriors. We now own 59 assets in 12 countries across 7 asset classes. We have the expertise to capture the entire property value chain. Now, we implement the Africa growth story. Growth from multiple revenue streams, monetizing our intellectual capital in asset, property, facilities, and development management. Growth from managing a property ecosystem. Growth from implementing a capital-light structure through co-investment opportunities. Growth from emphasizing impact income. We're standing at the edge of greatness. We're stepping into becoming a world leader in African real estate solutions that go beyond buildings. We're setting the global benchmark for property in Africa. We find the way.
Thanks to everybody, and thank you again for having us here today. I think from our perspective, and obviously being able to show you the video of what we do from an Africa continent perspective, I think what is really important is really around our investment strategy and our investment case. So we are a real estate business that is focused across the African continent, ex-South Africa. And our focus is obviously on what we see from an Africa growth story. And as we've seen, and as has been demonstrated over the last couple of years and into the future, really for us, Africa is the last frontier of growth. And our real estate story or real estate impact story is focusing on the population growth, the urbanization, and really what you see from a demographic change point across the African continent. So really, what are we? What is Grit? As you might know, we are a dual listed company that is listed on the main board in London and with a dual listing on the Mauritian Stock Exchange. The investment strategy is to focus on impact infrastructure type real estate across the African continent. We have investments into North Africa, West Africa, East and SADC Africa. And the idea is that it is a multi-geographic, multi-sector, multi-asset class portfolio that is focused on predominantly income producing assets. And I will touch on really around the investment strategy around the type of assets that we invest in across the African continent. What is really important to the investment strategy or the investment thesis is that we service the needs of global real estate tenants that have to be in Africa. So effectively, these global real estate tenants have to have a part of their business across the African continent, and we as Grit service their real estate needs, focusing on the whole ecosystem. So the development, the ownership, the management. What the portfolio looks like today is that 70% of our revenue stream is focused on 15 of these global tenants. The portfolio fundamentals, the actual hardcore bricks and mortar, we sit on predominantly just over 92% collections of hard currency, euros and dollars. We are a highly occupied portfolio, long dated leases, really focusing on being these global conglomerates real estate partner across these specific regions across the African continent. What is really also important is, again, it's the property fundamentals. So the property fundamentals, because we do pay a distribution every 6 months, so occupancy, cash flow collection, actually having long dated leases, hard currency, moving money out of these particular jurisdictions to pay this distribution is a key fundamental. So if you look at our portfolio occupancy, excluding our retail, which we are slightly disinvesting out, we sit with an occupancy or a vacancy of just over 1% on the portfolio, which again, benchmarked to global other real estate businesses, we sit with a highly occupied portfolio. And really around what have we done over the last couple of years? So effectively, I co-founded this business somewhat just over 9 years ago. The business thesis or investment platform really was fundamentally about bricks and mortar, property investing. So we actually own real estate assets, multi-geographic, multi-asset class around 12 African countries, ex-South Africa. We currently 100% own, we co-invest, we have other platforms that we invest into, real estate platforms. And effectively over time, over the 9 years, we've actually created a real estate platform across these 12 African countries, which means that we are able now today to not just own existing assets, but we do all our own property management, facilities management, leasing ourselves within the business. And when we talk about this Grit 2.0 strategy, it's not just about actual property investment or property ownership. It's also now about monetizing our IP across the real estate services side of the business. One of the larger deals that we have just closed quite recently is we've bought up a controlling stake in our development business, which I'll touch on now around the enhancement to returns. So now as the Grit Group, we control the entire value chain of real estate, which means if the American Embassy, which is a key tenant for us, comes to us, we are able to develop for the American Embassy, we're able to own that particular asset, and we are also able to manage it on behalf of the American Embassy. Again, focusing on the fact that we only deal with global tenants that have to have their businesses or operations in Africa itself. So for us, really around the emphasis of where the business is and where the business is going into the future. As you'll see that I make mention of multi-geographic, multi-asset class, the focus on the business around the core centers is we talk about income to impact. What does that mean? It means that we are focusing on these global tenants, specifically servicing industries of industrial, data centers, healthcare. When we talk about diplomatic accommodation, we service the needs of the American Embassy across Africa. And effectively, all of those diversified asset classes are really around property yields that are building up our total return to investors. So I'll take you through a slide just now which shows what our income producing assets look like and what our development assets look like, and the focus on these two particular sectors. But this gives you an indication on the type of asset classes that we are focusing on. So for us in the world of grit, there's obviously very important components. There's our hardcore real estate, there are tenants, there's obviously the operational performance, but there's also the fact that we are looking at different funding or attracting different funding. We have been very successful in attracting DFI money, specifically from the likes of the IFC. The entire focus of income to impact and what grit does across the African continent is not just servicing the needs for global real estate tenants, but it's also the impact that we are making in these particular regions. The impact from an asset perspective, the impact from a region perspective. So ESG, which I will touch on later in the presentation, is a very, very key focal point of the business that we've pioneered across the African continent specifically. When I talk about pipeline and I talk about the asset class focus, and I'll just touch on these slides slightly, what you will see into the future of what the Grit investment platform looks like is that the really focal areas of investment are healthcare. We've just delivered our first hospital project in Mauritius itself. We talk about corporate accommodation. This is servicing the needs, as I mentioned earlier, of the American Embassy, of the British Embassy, being their real estate partner to own their assets across the African continent. Remembering with the American Embassy, we sign leases out of the US directly. We collect US dollars from these particular tenants. I made mention that over 92% of our revenue stream is collected in hard currency, euros and dollars, which is very important to mitigate the Africa concerns around local currency expropriation of funds. So the ability to collect that rental and then further distribute it to our investors every 6 months is a key focal investment criteria for our business specifically. The other aspects that from a asset class specific that we are focusing on industrial impact, industrial warehousing, pharmaceutical, distribution facilities, cold storage. We have built through our development partner the first 3-tier data center in Nigeria, which services the needs of global data center providers for data, which is obviously a definitive need in an emerging market or a growth market like Africa specifically. So data centers from a pipeline specific side are very, very key to us. So really around just touching on the financial side. So we're building on the actual investment case, which is global tenants, multi-geographic, multi-asset class, but really around the financial side and the build-up of our returns back to investors. So historically, we have delivered and have committed to a total return of 12%. Okay, that is a US dollar return. How is that return built up? So effectively, we have a portfolio, a mostly occupied portfolio, long-dated leases, hard currency revenue streams that's delivered around about an 8% dollar dividend yield. And we see growth on our portfolio, net asset value growth of around about 4% on the portfolio. So we have delivered historically a 12% total return. The transaction that we've concluded whereby we've bought a majority stake in our development company is that we are now will have about 20% of our portfolio exposed to developments. Okay. And what that 20% exposure to developments does, it enhances our net asset value growth because we are developing at around about a 12% return, which is now getting sort of revalued to 9%. So the focal return focus for the business going forward is 12% to 15% going forward. The other line item that you will see mentioned out here is fee income. When I talk about fee income, what I mentioned earlier is we've created a platform across Africa. So we do facilities management, property management, development management, not only just for our own portfolio, but the ability to do it for third parties. So where we have pension funds, where we have other investors co-investing, we as the Grit Group actually do the services side of the business. That services side of the business creates an additional earnings capacity or capability within the group, which constitutes around about another 2% onto our earnings line or total return really around delivering a 15% total return to investors. Really around the key focus areas around what I've mentioned before. So I've mentioned the total return and what that build-up is. We do pay out an 80% payout ratio in relation to distribution. Currently on our share price, that is around about a 12 to 13% dollar dividend yield, because our share price is sitting at a substantial discount to NAV currently. We've also, what we have done historically, and what you'll see from some of our presentations, is that one of the big question marks in Africa, because you don't have a lot of liquidity or selling assets, is our NAV a recognizable NAV, or is the net asset value of the business the value of the business? What we have done over the last sort of probably 13 months is that we have disposed of around about $120 million worth of assets, which we've called asset recycling. This is non-core assets for us. So non-core, as you would have seen previously, things like retail, things like hospitality, and we have been able to dispose of those assets at net asset value, which further really goes to the investment case around the valuation of the business. We have to independently value every asset on an annual basis, which is done by our UK valuers, and that really just solidifies that the net asset value of the business is really the true positioning from the business from a valuation perspective. Really around the key group targets, so for really around distribution, we are targeting a sort of 4.5 to 5.5 cent distribution. The net asset value of the business, obviously dependent on valuations and the work that we're doing around that, is really targets around 78 to 85 cents. And then the loan to value target, which is obviously very important. We have around about 80% of our dollar debt hedged currently, but the loan to value, we do work on a geared model. Target sits around 38 to 44%. June, we have a June year end, which will obviously be coming out with results around about October. But those are really around the group targets from a financial point of view. The debt side of the business, as I've mentioned, we do operate on a geared basis. We were successful last year in closing the largest syndicated debt structure of its kind in Southern Africa of $306 million. What that has given us is the ability to demonstrate to the market that we can refinance debt, the ability to have longer dated debt for Africa. We're still seeing the cost of funding coming in relatively good for the Africa exposure. There has definitively been an impact by rising interest rates, of course, but we obviously have a hedge strategy, which is obviously very, very important. So the loan to value and managing our balance sheet risk is a very key component to the business itself. I mentioned this cross-securitized debt facility that we did last year. It was led by Standard Bank, and it has actually been the recipient of many awards because of the ability. One, it was sustainability linked. So it's got very specific ESG targets, and it was one of its kind for Southern Africa, and really around the ability to actually take a number of countries across Africa and cross-syndicate for a much longer dated debt facility, and the ability to refinance countries that are seen as a little bit more difficult, i.e. Ghana, i.e. Zambia. We had the ability to refinance those countries specifically in the syndication itself. One of the big components of really our share price and the evolution of our share price, and obviously the distribution. So pre-COVID, we were trading at around about a 5% discount to net asset value. What happened over COVID? Obviously, it was a global pandemic. What we saw itself is that we stopped distribution over COVID. We have resumed distribution back again out to the market, and we are distributing our dividend again. Because we had a substantial exposure to the hospitality sector, we actually then saw over COVID our share price obviously dramatically fall, and that was really around the basis of the distribution and obviously the exposure to specific sectors where valuers in the market were very concerned about. However, post-COVID, what has happened? We've actually, as I mentioned earlier, we have resumed dividend. Interesting enough, we actually have disposed of a very large portion of our hospitality portfolio back to the operator at net asset value. And all of these now is we are obviously sitting at with the acquisition of the development company, a forecast total return that we're looking at now of around about 13 to 15% in the business. So whilst we still sit at the substantial discount to net asset value, the actual net asset value and the operational portfolio performance, the cash collections, the occupancy, the tenants themselves, the actual hard currency, the developments that we are doing, the type of projects that we're doing, the actual fundamentals of the business are very, very strong currently. As I mentioned earlier, sustainability and impact is really a key component of any business globally, but specifically operating in Africa, we are able to have a very, very large impact across the regions. And really around the sustainability side is, one, it's our environmental side. We, through our development company, have just built the first 5-star green rated building in the Indian Ocean, the Precinct building, which really is a global benchmark and sets global standards in relation to building efficiencies and what we see from an impacts perspective, from a building perspective. Our London listing and through our various associations, the governance side for an Africa business, we sit on the main board, premium listed in London. And then the social impact, which is really important, being a woman-led business, gender equality, really just absolutely focusing on women in, not just in business, but in construction. We led a project in Kenya, which is the build of the American Embassy, where majority of our staff on site and operating that particular development, American Embassy development in Roslyn Place, was actually led by women. And the impact that we've done just from, really just starting this business and now going across 12 African countries, regionalizing staff, people, teams, has really made such an impact across these regions. So the ESG targets, having the sustainability linked program, the pension funds that invest in grit today, the impact money that invests in grit, this is a very, very, very material component to our business. So on that note, just before I sum up, I would like to show one of our other videos, which is just the ESG video, which is obviously very, very close to ourselves and what we've been able to do from the market. So if we can just show the ESG video now, that would be great. And then I'll do a summary really before I take any questions.
Rugby is a sport for all. It doesn't choose sizes. It doesn't choose your background. It doesn't choose your height. We work with communities in the major slums in Nairobi.
Quand vous accueillez les gens, les personnes surtout à leur âge, à la fin de vie, être dans un lieu convenable, propre, et leur redonner le goût de vivre.
Grit wanted to help All Life Matters with its cause of being an animal sanctuary, helping the communities and helping with sterilization.
Construction is very male dominated. The sector currently employs 3% or less of women.
Our work is to rescue children of imprisoned mothers.
They haven't had a chance to build visions of their life. And so we enable women to be able to look at themselves as a priority by giving them skills and tools.
Before build her, I would not be able to sustain my kid. I would not be able even to afford the money for Pampers. But now when I got a job, I'm able to provide for school fees.
Just last year, 5,280 animals got sterilized. We've probably got about 16 people employed, and we have so much improved their lives.
This building is specifically for the girls. Our dormitory right now, we do not have a place where we can keep the adolescent girls to give them their privacy, and we also increase their numbers. And that is why we need this support so that the building can be complete and the girls can have more room.
BRIT coming in is really big for us. It's helping to support more than 2,500 kids. One of the biggest impacts that BRIT make on our beneficiaries is with the trip of our under-15 team going to France during the France World Cup. This has contributed before to kids coming back and doing well in school. They end up being great people in the society.
Certainement, ces travaux nous ont beaucoup aidés. Très reconnaissante pour la compagnie GRIT.
The collaboration between GREA and Build Her is very important. They see the impact that you're contributing to the society. They see how important it is to support women's empowerment and integration into construction, and they want to be a part of that.
So thanks to GRIT, at the end of each month, I'm able to do my salaries, buy food, buy the medicines, and I cannot be more grateful.
So thanks, everybody. So I think maybe just to provide a summary, and whilst I was showing that video, I had an opportunity to browse through a couple of the questions. So maybe in the summary, I can sort of address one or two of the questions already coming through. So I think one of the questions, which is obviously very important, is what are we actually offering investors? And I think that's obviously a very, very important and pertinent question. So from an offering of investment perspective, and when you look at this particular slide from income to impact, really what we are is we are a platform and the ability to access the African continent, okay? And as I've mentioned, the African continent, for me, and actually as understood, is really one of the last frontiers of growth, okay? And our investment across the African continent through our London listing and through our governance structures and through our platform of over the last 10 years, putting a fully operational team, just over 200 people across 12 African countries, is that we have a platform across 12 African countries. And in that platform, we have invested in real estate that services global tenants like the American embassies, the Anadarkos, the Halliburtons, the Vodafones. We sign hard currency leases with these global conglomerates. We develop, we own, we manage on behalf of these tenants. And what that allows us to deliver to investors, it allows us to deliver a total return to investors. That total return is underpinned by our real estate itself, our access to fees through our services platform. So we are able to deliver an 8% return on the basis in dollars from a dividend perspective, and that we are then able to deliver the Africa growth story through the growth of these particular real estate investments of around 4%. With the add-on of our development, of our acquisition of our development business, we are able to deliver a total return to investors through investing through a platform of around 15% built up over time in hard currency in US dollars, which is underpinned by this team, ourselves as management, who's hugely invested and personally invested in this business. We have acquired and own a substantial business in the business ourselves, our entire management team, and we pay out dividends every 6 months. So it's access to cash return on the investment. It's access to the Africa growth story through the net asset value and our development arm. And also just really around, if you were looking at American embassy in first world markets, talk about the UK, those assets actually wouldn't even be on offer effectively. We're able to deliver and develop those assets at around 12% total return and actually own those particular assets on our balance sheet because it is the African continent. And you have a team that's able to manage and mitigate, which is hands-on in these jurisdictions, managing a lot of the Africa risk. The Africa risk is on-the-ground presence, expropriation of money. And another question, which is a really good question, is really where are the key focus countries in Africa? There are 54 countries in Africa. We are not going to be investing in all of them. We currently invest in 12. Where do we see huge opportunity? We see huge opportunity in countries like Kenya, in East Africa. We see huge opportunities in SADC Africa, around Mozambique, Mauritius, Botswana. We see huge opportunity in West Africa, around Ghana specifically, North Africa and Morocco. These countries for us, a lot of them are close to investment grade. A lot of them have very large impact stories globally, and we are there on the ground to support these real estate needs of these global tenants. So those are really the countries of focus, but that's what we can deliver to investors. A lot of investors want to invest in alternate markets, but they don't know how to ultimately get there. Grit itself is the bridge. It's the conduit. And it's the bridge that's setting these global benchmarks, that's working with these global tenants, that's developing 5-star green rated buildings in Africa itself. And it's giving access to money that's coming in that wants to be a part of this Africa growth story, but doesn't know how to access it effectively. So that's really the focal point. And when we talk about focus assets going forward, data centers, healthcare, industrial, medical, hospitals, these are sustainable assets from income to impact for the future of Africa, for the future of emerging markets. And that's where the resilience of the Grit story comes about. So that's really in summary, and it would be great to take some questions now from the audience.
Hi, Bronwyn. Thanks very much. Very comprehensive presentation, and we do have some more questions that we're going to try and get through. I would just let listeners know that we're going to be doing a follow-up podcast with Bronwyn in the coming weeks, so do keep an eye out for that. If we don't have time to ask all of the questions that are in there, because there are quite a few. So we're going to start with one here, Bronwyn, from Alan, who asks, how have rents performed since the pandemic, and what has the impact been on the portfolios now? I think you did ask this slightly before you went through a slide on it, but it would be good to get a little bit more detail.
Yeah, so it is an interesting question, that. So, I mean, remember that we work across the African continent. So a lot of these countries didn't behave exactly like a lot of countries globally in relation to the pandemic. So countries like Mozambique really didn't have much of a lockdown. So, and our type of assets there, the Anadarko's head office, Vodacom, American Embassy, actually were not impacted much at all. So I actually look at our COVID world. So 50% of the Grit portfolio, which is the American embassies, the conglomerates that really continued business, actually wasn't impacted or not that much by COVID. Okay. The other portion of the portfolio, which is 25% retail, which we are now substantially reducing retail, countries like Morocco had quite severe shutdowns. So that was we had a very big impact on rental streams, but post-COVID, we've seen a very, very big recovery of those. And then 25% of the portfolio was hospitality. Remembering that our hospitality is sale and lease back, we don't take hospitality risk, Beachcomber, Lux, Club Med. So whilst we had to give rental holidays over that, we actually never wrote off any rental of that period. And where we stand today is all of that rental has been fully collected now. We have sold the Beachcomber assets back to Beachcomber, which we did that transaction this year at net asset value. I made mention of the fact that, you know, selling assets at net asset value really just solidifies the valuation of the business. But really, that's how we split the world of Grit over COVID, and that's where we're sitting today. When I talk about focusing on impact assets going forward, it's those resilient assets, the healthcare, the data centers, the industrial, the American Embassy. That's the impact going forward, and that's the focus of Grit 2.0 going forward.
Thank you. So there is another question here, Bronwyn, which I'll just ask very quickly from George, that does ask about the retail units. And of course, as you said, it's seen as a non-core asset now. So we asked about the challenges being faced by retail units in Africa. Are they the same as here in the UK, for example, with the rise of online shopping? And maybe a secondary question here to follow on, you know, what does it look like in terms of retail in the portfolio at the moment, it being a non-core asset? You know, are you looking at completely coming out of retail, or are there specific units that you really do like and you're going to keep hold of those for the longer term?
Yeah, so I split our retail universe into two parts. So you have the very large super regional shopping centers. And that is, we have one particular asset in Morocco that falls into that asset class, which for me is a lot more complex for Africa. So it carries more luxury brands. And that is where we've seen the more distressed retail in Africa. You know, what I still like for Africa is that convenience. I call them sophisticated sort of boxes or strip mall type concepts, sort of rural retail. And a very good example of that is where we have a shopping center in Zambia, for example, that sits in the northern part of the Copper Belt that services 4.5 million people, where traditionally those people had to go into Lusaka, which was a 4.5-hour commute to shop. Now you've created a retail hub or box retail concept closer to where they live. That retail is still very strong in Africa and continues to be so. When you talk about online sort of concepts, that hasn't really come to the continent, because remember, you need infrastructure, you need roads, you need warehousing. So yes, something like South Africa, we obviously, remember, don't operate in South Africa, but in these other emerging markets, this online concept is a very long way from where it is, where you see in the UK currently. But the retail that we see that will continue to be successful in Africa is really that convenience, that servicing basic needs of people, which is really, really important. Still a very important thesis for Africa.
Thank you very much. So there's a question here on the discount to NAV, Bronwyn, and it's from Alan again, who asked, what is your policy on share buybacks to manage the discount to NAV?
So we actually have announced and have got an authority to do a share buyback. We've done some form of share buyback over the last couple of months. And it is interesting because it's trading at, I think, just over 50% discount to NAV. It is an interesting use of capital. The interesting thing is that we would ideally like to keep cash in the business than necessarily just use it to buy back shares. So we have implemented a small buyback, which has helped liquidity. One of the other struggles on the London Exchange is obviously our lack of liquidity, which is one of the things we're managing very closely. And it is a very definitive strategy for us, and it will be implemented into the future. And we have started doing it somewhat over the last couple of months. So it actually is a very good question.
Thank you. So there's a question here from David, who notes very good presentation, but he also asks, apart from interest rates, what do you see as the biggest risk to the GRIT business model?
I'm sorry, David said apart from interest rates, because that would have been my answer. So I think definitively, obviously, with the geared model, I mean, we have hedged out a lot of our exposure, but obviously rising interest rates. Interesting enough, though, with rising interest rates and inflation, actually a lot of our leases are inflationary linked. So we've actually seen quite a substantial increase in our escalations. So American Embassy actually in Mozambique, for example, we've just escalated just over 9%. So it actually swings around about. So we've also seen the benefit. But I think for us, it's now sort of under GRIT 2.0. And what we saw historically is we wanted to ensure that we created a platform. So that multi-geographic, multi-asset class has served us well historically. But becoming more specialist into the future, focusing around those specific tenants, servicing the needs of those specific tenants and asset classes, for us is one of the risks that I had seen historically in the business. So that focused approach going forward is really, really important. Remember, Africa is I can stay here and tell you what we do is relatively easier, but I would be lying. I think we've got a platform that makes it a lot more streamlined, but we are working in emerging markets. So risks do exist in Africa, risks do exist in emerging markets, things like changes legislation, tax regimes, et cetera. But I believe that we operate in the countries that have been sort of very forward thinking in relation to this, and really the investment thesis for countries like Kenya, countries like Mauritius, countries like Botswana is very, very progressive. So that really mitigates a lot of that. One of the big questions we've always asked about expropriation of funds, can you move money out of these countries? Remembering that we invoice in hard currency, we collect in hard currency. So for us to move money out is a lot easier than some other business models. In the years of operating this business for 9 years, we have political risk insurance, which covers dollar liquidity and expropriation of funds. We haven't had to draw on it as yet. Always call it our doomsday insurance, but it does exist. So it's all of these mitigants that you have as a management team that, again, makes us a great conduit or great bridge into Africa effectively, because that we manage those Africa risks per se to create a return back to investors that is fairly mitigated from an Africa growth story perspective.
Thank you very much. Now, unfortunately, there's been some other questions that have come in, but we've ran out of time, unfortunately. So as I did mention, we'll be holding a podcast with Bronwyn in the coming weeks. So we're going to take a note of these questions, and we will be addressing those to Bronwyn, as well as looking at the latest developments when we speak, as I say, in a few weeks. So Bronwyn, thank you very much for being with us today.
Thank you. We've really enjoyed it, and thanks for having us. We appreciate it.
Thank you.
Thank you. Bye-bye.
Bye-bye.